Good evening, ladies and gentlemen. Kicking off this new year, our first webinar of the year, and what could be more important than raising money? I'm delighted to welcome Nigel onto the webinar this evening, and Nigel will be talking about, so what can I borrow? In this changing environment of Brexit and uncertainty, if you're running a business, or if you're growing a business, or if you want to build a business, you'll need money, and you'll need to borrow money at good rates, at competitive rates, and on competitive terms. So Nigel, our head of commercial finance, is here tonight to highlight to you what you can borrow, share some ideas, and his, is it 38 years of experience in banking, Nigel?
Yeah, thank you.
Yeah, sorry about that. But I think if you can impart your wisdom and knowledge and experience, I think everyone will find it very, very useful. So over to you, Nigel.
Thanks very much, Aaron, and good evening to everybody out there. So surely the numbers are climbing steadily as people are joining, so there'll be a few more joining as we start the webinar. Tonight, as I say, we're going to talk about, what can I borrow? And I think in most instances, when I've been talking to people, associates and principals, most people are actually surprised by the amount they can actually borrow, and they don't really understand because lending to the healthcare profession is very different to lending generally, in that a lot of the lending is done on an unsecured basis. That is, that no security is put up, no property, no guarantees. And this is unusual in banking, where banks, as most of you will probably know who've got mortgages, love a piece of security. So we're in a different environment, and therefore the things that affect what you can borrow are very different, and they're very, very important. So if we can put up the first slide, Aaron.
Sure.
Right. So I've put this up as the factors that affect your ability to borrow, and these aren't always the sort of things that people think about. Most people think about how much money have I got, and how much can I borrow. Those are the two things. However, all these other factors affect your ability to borrow. So your credit score. Is your credit score good? Now, it's interesting that a lot of people don't know what their credit score is, and you can go onto the internet and you go onto Experian, Equifax, these sort of people, and for a very small fee, you can get a full credit report, which will give you a credit score. And the credit score is normally out of 999 or 1,000. So obviously, the higher your credit score, the better risk you're seen as by outside people. It's also important about the type of deal that you're seeking. You could be seeking to do a startup business, which is obviously more risky than buying an established business that has an income stream already built in. Although there are risks to buying an established business as well, such as patients leaving when the principal retires or exits, and obviously you changing the business in some ways could affect the business as well. So they're all different sorts of risks in the type of deal being sought. Background and experience is probably one of the most important. And this is an interesting one for especially associates. When you're an associate, you need to be involved in the running of the business that you're in. And I don't mean you need to be making decisions on a day-to-day basis, but you need to understand how it runs. You need to understand how they deal with CQC, how you deal with HR matters, how you deal with staffing, contracts, employment. Because when you move from being an employee to being an employer, these are great big steps. And most lenders are very wary of this. So your experience, the number of years you have as a dentist, and what type of dental work you do is important. But also, do you have any business experience? So do you understand how to run a business? We move on then to your plans, and this really reflects on your experience, because the detail you put into your plans, your business plan, your projections, reflects very often how much experience you have. It's very often a good idea to put in a CV as well, because one of the things that most people don't do is blow their own trumpet about how good they are and what they've done. And actually, when you sit down with a blank piece of paper and actually have to detail what you've done, what experience you've got, what qualifications you've got, you'd be surprised at how much there is on the piece of paper at the end of the day. It's also important your own situation. Obviously, this is background stuff. Do you have any assets? Have you bought a property? Do you have savings? Do you have other incomes? These vary depending on what sort of business you're buying. If you're doing a startup, obviously other incomes is quite important. So if you're married and your partner has an income, then that helps to cover the day-to-day costs of running your home, gives you more money available to help run the start-up business, which obviously will not be generating a lot of money at the outset. The fact that you've got assets, and people are often frightened to put down they've got a house with £400,000 worth of equity in it, it doesn't mean that the banks are going to make a grab for it and the lenders want to take it as security. They just want to see what you've done with the money that you've earned over the years. And how the deal is structured is also very important. This isn't just about getting a loan. A loan is a very simple thing. It's about how do we structure it. So if there is security involved, you should have two different loans. You should have one secured and one unsecured, because that way you can get a better rate of interest on the secured loan. You might want to consider asset finance for buying the equipment, chairs, cabinetry, scanners, that sort of thing. And you have to decide whether you want to put up security or not. It will bring down your costs. That always brings down your costs because it brings down your rate of interest. And very often it gives you a slightly longer term. It's also important to know who to approach. Many lenders out there, some do lend to the healthcare sector, some don't. Some lend to the healthcare sector against goodwill, some don't. Some lend against dentistry, for example, as a fixed amount, whether you're an NHS dentist or a private dentist, and they won't go over that limit unless they can be persuaded. Now, obviously, I know that because I used to work for a bank, and therefore they can be persuaded to go over that limit, but you have to know how to do that. And most of them have specialist teams. And it's important to make sure you speak to the right people, because if you're not speaking to the right people and you go into a bank and ask for £800,000 unsecured, you're probably going to get a no, because that seems an awful lot of money, and most people don't know that the healthcare sector can borrow that sort of funds. So it's important to know who to approach and then who the managers are within those teams. As in all teams, there are good managers and there are outstanding managers. And the best thing we can do is place your business with a very good manager. So it not only looks after you at the point of drawing down the loan, but will also look after you moving forward, because you may want in 2 or 3 years' time to buy another practice. And then it's therefore important you have a relationship with the bank who can help you. Next slide, please, Aaron.
Sure.
So what are the lenders looking for? We've talked about all the background stuff that they look at. They're looking on your credit score. They're looking for you to have regular repayments, no defaults, and perhaps a reasonable level of credit. They also want to see what credit you've got. If you've already got 15 credit cards and they've all got limits of 10,000 and you're maxed up to the top of those, you can understand that they're going to look at that as a bit risky. So it's a good way of them checking up on the information you're giving them, and also on getting a second opinion, in effect, of a credit analysis company as to what your credit score is.
Nigel,
sorry.
Can I ask you a question? So just maybe other people are thinking about that. If people aren't paying their credit card bills off on a timely basis, or if they've had some problems with their student loans or just some financial problems in the past, how much does that impact the credit score? Do you know?
It does impact on your credit score very quickly. They're quite hard to look at, these credit scores. They do give a definition at the beginning of how to read them.
Yeah.
But yes, it will impact on your credit score, and it will bring your credit score down. It also highlights, obviously, to any potential lender that there have been issues. And what we'll do is we'll cover that off in a bit later on about issues,
Sure,
and how we deal with them. And yeah, if you've got issues, the easiest way to deal with an issue is to be honest about it.
Sure.
Because very often the issue you've had, it was no fault of your own, you couldn't do anything about it, and you're now dealing with it. So as long as those are the reasons, then it's not really an issue. But a lender is obviously only looking at a black and white report. So it's very important to make sure they understand what they're looking at.
Sure. And what if I've taken out, or someone's taken out multiple loans of 25 grand? You know, you can get to Tesco, you can go online, you get all these different loans. If you've got a multitude of different loans, or is that a negative thing on a credit score?
It's not the best thing you can do in the world.
Okay.
Again, the questions would be, for me, why have you done this? So if you turn around and say, well, I did 3 different courses of implants and oral technology and all this sort of thing, I bought some equipment, I did this and I did that. Again, it can be explained away. However, yeah, obviously it's going to impact on your credit score. And the other thing that impacts on your credit score is the number of searches. So if you go looking for a loan and you go through 5 different companies and you take it with one, you will have 5 credit searches on your file. And again, it doesn't look good and it needs to be explained.
Okay.
Yeah?
Yeah, useful.
Yeah, okay.
Yep.
Yeah. Right, let's go back with details of the purchase, description of the business. Most people come to you, I want to buy a practice. Yeah, it's very easy to say, I want to buy a practice. We've got to have 2, 3 surgeries. What does it do? What sort of equipment? All that sort of thing. But obviously, lenders look at the figures. The figures form a big part of their analysis. They want to look at EBITDA, which, if the people aren't aware what that is, it's earnings before interest, tax, depreciation, and amortization. So if you're looking at a set of accounts, you look at the net profit, and you add back on the things that aren't, I won't say real because we've got an accountant on the line, but depreciation is a figure, a paper figure, and interest and things like that are what the principal is paying at the moment, not what you'll be paying in the future. So they can all be added back on to show how much profit the business is making. Also, background to the business. It's quite important to know how long it's been established, how long has the present principal been there. So it gives the lenders a form of comfort around this is a very established business, it's not going anywhere, patients are relatively happy with the location and everything, and they're not going to move on. So it's all about a story about what their business actually is. And then I'm talking again here about the experience. We talked about this just a few minutes ago. What have you done? What experience do you have employing and dealing with staff, payroll, insurance, and property? Quite important. And if you're looking to start buying, it's quite a good idea if you can, and obviously some principals won't allow you to do this, but you can start to get involved in the day-to-day working of the business. And if you've got a good principal who wants you to get on, he will help you to do this. The other thing is obviously checking the figures. You're given these figures by an existing dentist, they have to be checked. And your solicitor will carry out due diligence, which is the checking of all the numbers, the client list, and everything else. And then, in some cases, it's necessary to prepare your own projections. Projections aren't always needed. Excuse me. Projections aren't always needed because very often things don't change. But if you're, for instance, going to keep on a principal and he's then going to work as an associate, the numbers that we all given when they're selling the business are going to change because the principal is the one who takes the money after the net profit. His costs are going to move above the line and he's going to be paid as an associate. So sometimes it's necessary to change the figures and do a projection. Projections are obviously needed on a startup. Most lenders will look for at least 3 years projections. They want to know the assumptions, and by assumptions I mean the reason why you've given certain figures. So why have you said you'll see 5 patients in the first week and 10 patients in the second week, that sort of thing. And your net worth is as much as really secures the unsecured element of the loan. If you've got assets in the background and you've used your money wisely and you've saved money and you've invested wisely, it gives most lenders a very, very safe feel about you as a person, which is very important. Okay, thank you. So we'll get to the third slide, and everyone will be pleased to hear it's the last one I'm going to drone on about. This is what we do. So what do we do? Well, obviously, I use all the years of experience that I've got of working for a bank to try and put this into a position where the bank will basically tick it through and read it as a story in the right order. And so we review your position, we look at your financial figures, we'll actually challenge you. We'll actually talk about what savings you can make. I mean, sometimes clients will add back on we talked about adding back onto the net profit to make an EBITDA figure. Some clients and some agents who sell practices will add back on things that really you shouldn't be adding back on. So we'll take those back off to make sure that they will work for you, because the worst thing you can do is buy a practice and then find that the figures were totally wrong and you're not making as much money. We'll actually discuss a way to get the projections if you need them. And we've got a firm of accountants in the background, they can do them. Your own accountant can do them. But it's very necessary to get them in the right format for a lender so that they're very comfortable with what they're looking at. I received a set the other day from someone. They were very detailed over 10 years, but they were only done on a yearly basis. Now, lenders want them on a monthly basis for the first 3 years. They want not only to be able to see what you're doing and where you are, but they also want you to use those numbers to actually check where you are. So it's very important that the projections are right. Structuring the deal we talked about is very important, and if you can structure the deal in the right way that the lender likes, then that's a good tick in the box, because he hasn't got to think about how to change things around. And now we get to deal with the issues head on, which is what Aaron raised earlier. If there are any issues, and they can be, as Aaron said, they can be debts for education loans. You can be behind on your tax, which you're sorting out and you're going to clear. It can be credit card debts generally. It can be that you've borrowed money for various items of equipment or cars or whatever, and you just need to sort of tidy it up and refinance it in a way that makes it look a bit more comfortable. But the thing with this is always to deal with the issues. Now, you know, if you talk about these and you explain why they've arisen, you explain what is being done about them, the lenders feel much more comfortable. A lot of people will leave this sort of thing out, and the issue there is that the lenders have been doing this for many years. So if you leave something out that's obvious, they will come back with questions. And what you really want in life, you really want someone to come back to you and say, yes, we'll lend you the money without any questions. So we'll also structure the deal for the lender. We'll put it in the right format for them. We will practically write their first page of comments so that they understand what your character is, your ability to pay the debt, your means, what the purpose of the debt is, and most importantly, how much you want to borrow. It's very important that we get that right and we pitch it to the right bank at the right level. We also include details of the repayments. They will check those, but the idea is to show that we've actually looked at this and we've checked it ourselves and we know what's needed to repay the debt. And at the end of the day, if you want to offer a security, you can offer it. But I would say you listen to people, and if there's no need to offer it, you don't at that point. We will deal with the lender all the way to completion. And that means that, you know, if we're there, when they come back and they might ask a question, they might query something, they might want something more up to date, like a bank statement or something, we can help you get that for them in the right format and get it over to them as quick as possible. What that all adds up to really is, you know, a smooth process. The lender at the end of the day is looking for the perfect loan. There is nothing ever in the world that's perfect. So what we do as a firm is we package it and put it in the right format for them and get it as near perfect as possible so that their life is made easier. And as everyone knows, if your life's made easier, it's much easier to say yes than no. And that's really what you can borrow. Now, if we want to talk about numbers, that is far more difficult because it varies so much. But there are a lot of lenders out there who will lend you 80% of goodwill value. There are lenders who will lend you a fixed amount if you're a private dentist, and lenders who will lend you a fixed amount if you're an NHS or a mixed practice dentist. The 20% deposit that's required in cash often is obviously the problem for people. It can be got round by providing security for part of that. Most lenders will require at least 5% in cash, but they will accept 15% in security. So you can almost borrow 95% in effect. So it is a very good way of structuring the deal. But that is only a maximum. And what you've got to understand is, whilst they're maximums, they will always pull back slightly if there's any of the issues we've talked about, any of the things we've talked about, not quite right, they will pull back slightly. So, you know, it's very easy to say that's the maximum they will lend you, but it's not always that case. So you have to be very wary of that.
And Nigel, do you want to give people a flavour of the values of deals that we've just done recently in terms of number terms, so people can understand?
Yeah, of course. Yeah, it's obviously it varies between startups and existing practices. Couple of startups from scratch we've done recently. They cost about between £200,000 and £250,000 to start, and the banks on startup will lend you 70% maximum of the startup costs. So we've done several of those. We've also done recently a £1 million deal in the southeast, which included a freehold purchase of the premises as well as a purchase of the practice. And earlier, well, I was going to say earlier this year, but obviously last year we did one in Manchester towards the end of the year, which was in fact a startup, but because it was also the purchase of a freehold, that was 1.1 million, and we got that through as well. He did have two existing businesses as well, so there was a lot of cash generation in the background. But it's that sort of thing we're doing. Obviously, we do tax loans as well. We do a lot of those at the moment for people, and asset finance. I mean, asset finance is important. I blogged on this today actually because the issue with asset finance is if you're going to go and buy a cone scanner or something like that, you don't want to take it all out of your cash flow. So you can spread it over a number of years against the life of the equipment, and that eases your cash flow as well. It's the same as when you buy a car and you take a loan for that. It's exactly the same process, and the asset companies like it because they actually get a charge on the asset. So that to a degree is a form of secured lending. So that's what we've been doing in the past few weeks.
Okay, fantastic. Okay, very good.
Has anybody got any questions?
Any questions out there?
You can type them in, can't you?
Yeah, you can type them in. If you've got any questions, type them in. If not, let me ask you a question from me again, Nigel. Going forward with the uncertainty of Brexit, and I know no one has exactly a crystal clear ball going forward, crystal ball, but are we forecasting any changes in interest rates? Are banks mentioning anything like that?
Yeah, it's always difficult to forecast interest rate changes, but the interesting thing is we're now 7 months, 6, 7 months into Brexit,
Yeah.
and we're now into the bit more detail from yesterday about what's going to happen. Lenders have not changed their appetite at all. They still see healthcare as a very viable sector. They still see it as being very safe in the sense of getting repayment, so they like it. Rates at the moment at 0.25 base rate are probably the lowest. I think they are the lowest they've ever been. Will they go down anymore? I doubt it, but that's only my personal opinion. Please don't everyone be guided by that. It's very difficult when you're saying about rates, but yes, they probably will have to go up. Inflation's going to rise, costs will rise. It may be that inflation rises. It depends on the Bank of England and their stance. But it gives everyone who's taken a loan at the moment, the fixed rates that have been offered by the banks and the lenders generally are very good, and you can actually fix your debts for 3, 5, 7, and 10 years, so you know what your payments are going to be in the future. I mean, the obvious downside to that is that if you fix it for 3 years and you repay it, or you want to make extra payments in that 3-year period, there would be a cash penalty. And on the variable ones where everybody just pays against base rate, most of the lenders we deal with, they have no early repayment charges. So if you want to repay it early, you can do. So that's quite useful. But yeah, rates generally at the moment are very, very good. If you're looking at secured lending, you're probably looking around in the healthcare sector 2.6 to 3% above base rate. And for the unsecured side, you're probably looking at 3.5 to 4% above base rate. So they're still very, very low, more in line with mortgage rates than bank lending rates. So you can see from that the bank's lenders' appetite is very strong because they're looking to lend into this sector.
And in terms of, let's say I've got an existing loan already. Obviously, as you said, the rates, as you said, in my mind, if inflation's rising, the only thing you can drive inflation with is interest rates. So interest rates will rise at some point in the future, I imagine. But what we then have to start thinking about is, if you've got a loan already, is it a good time to fix that loan? So it's maybe an opportunity to refinance if you've got an existing loan. If there are no penalties, it may be in time to refinance that loan and fix it at a prevailingly good rate at this stage. Don't you think?
Yeah, I think it's always you should always every year or so look at your finances and check what your rates are and what your repayment dates are and where it's going. Because if you want to fix your rate, I mean, most rates at the moment are quite low on healthcare lending, but they are starting to rise. I mean, 5 years ago we were seeing 1% above base rate. We're not seeing any of that now.
Sure.
So if you look at 1% above base rate to 3.5%, that's 0.5% above base rate. They've risen quite substantially.
Yeah.
So yeah, look at your actual figures. It may be that you might want to do something else. You might want to make a bid for the freehold of the property that you're in as well. If
Sure.
you want to actually stabilise your rent costs by buying the freehold of the freeholder. But refinancing is always an option. Um,
Hello.
if you put it onto a fixed rate, you
Yeah.
know what you're doing. You know what you're paying month on month, which is very useful for any business.
Sure. We've got a question that's come, Nigel. What kind of security can be used as collateral?
Um, well, the obvious one is a property, because that is the one that lenders love. And buy a property. It could be your own property. It could be a family member's property, like a shared property. Buy-to-lets, they can be used as well. It's just a question of them having some equity in them. I hope everyone understands equity is the difference between the value of the property and the mortgage outstanding on it. So as long as it's got a decent amount of equity in it, you can use any of those. One recently we've used a buy-to-let which was owned by the purchaser and his father. They bought it many years ago. I mean, the beauty of that one was it was totally unencumbered, no mortgage on it at all. So it was used for a substantial amount of the debt, which we were successful in bringing down their cost base quite considerably. So yeah, it's mostly property. You do see life policies being used where they have a surrender value, but you don't see many life policies nowadays with those surrender values. So they're not used very much. And that's basically it really for lenders. They like property. In fact, they love it.
Okay. What about cars?
Cars.
Would that be considered as equity or not?
Sorry?
Would that be considered as collateral rather?
No, no,
No.
no. The only way, if you've got a newish car, then you could actually take out asset finance on it even after you've bought it, and that way you could raise a lump sum to bring back into the business, but you won't be able to mortgage your car against a commercial loan. No.
Okay. Okay. And then another question is, what would you consider as a decent? You mentioned the word decent equity on a personal property. Is that like 20%, 30%, 40%, 50%? What's a decent equity value on a mortgage?
Yeah, obviously it depends which part of the country you're in. But yeah, if you've got equity in your property of somewhere between 50 and 100,000, that's when it becomes worthwhile using it as security. But obviously, it depends when you bought the property, because most people, when they buy the property, have very little equity at the outset. But yeah, if you've got a decent amount of equity, I would say 100,000 is a very decent amount in this day and age. You can use that. Under that, it's probably not worth using too much, because you would have to pay a valuation fee and then costs of taking the security. So that would probably be around £1,500. So you start to negate the value of the security for you and saving you money on the loan if you're not careful. But yeah, if you anything over 100,000 is very, very good.
Okay. Okay. Very good. Okay. Well, we've been going 30 minutes. I think we've kind of asked what's up. Another question has just come through as we're about to go ahead. They're all coming in now. How does someone go from buying one practice to more practices in the future when trying to raise finance for the future practice? Can you get lending based on profits of the first practice? It's quite
Yeah, it's a very simple
an
answer.
interesting question there, because we were talking about this yesterday. We will be doing
Yeah,
a future event and webinar on how to basically build a dental group. But so watch out for that. But Nigel, do you want to share your wisdom on this question?
yeah. It's very simple. Yeah, whoever asked the question has got the answer in the question. The answer is yes. You can use the profits from an existing practice. So if you've got a practice, let's keep it simple, that's making £200,000 a year, and your costs of loan on that and drawings are, let's say, 100,000. That other 100,000 can be used against a new practice to cover the debt servicing costs of the new practice. What a lot of people do is they buy a smaller practice to start with, and then start building up and up and up as they go along. So you've got the option: you can either sell your first practice and buy a bigger practice, or you can use the profits of the first one, and they can help cover the debt servicing costs, i.e. the loan repayments, on the second one. It's what that does in effect, if you think back to the slides we talked about, it helps you on all the experience and the ability to run a business and all this, because you're demonstrating that already. So you don't have to re-demonstrate all the experience and I can do this, and you're already a principal. So at that point, you can actually buy another one. The issues with buying another one are normally location and distance, because obviously you need to keep control of it. So that's what the lender will more look at. We'll look at where it is and can you run it, and have you got enough experienced associates to run the business you're leaving. Danger always to buying a second one, and this is any industry, it's not just industry, is obviously keeping your eye on the ball on the first one to make sure it continues to generate the profits so that it continues to pay for the second one. But yes, it's very possible and very easy to do.
Okay, fantastic. Well, on that note, Nigel, do you want to wrap up, and I'll say farewell as well?
Yeah, I'll wrap up. Thanks everyone for attending. I hope it's been useful for you. If anyone's got any questions, on the contact sheet is my email address and phone number. If anyone wants to talk specifically about their own circumstances, because everyone's circumstances are very, very different, I'm more than happy to have a free discussion with you regarding that and talk about how you can move forward to buying a practice or buying a second practice. So just give me a call or drop me an email, and we can arrange a time. We do obviously we do calls in the evening. You can see that. Very often, a couple of nights a week, I will talk to people in the evening because I really.
Hello? Hello? I think on that note, I think Nigel's got cut off somehow. But from myself, I just want to say thanks for everyone attending. Next week, we will be hosting another webinar titled The Financial Path of an Associate Dentist. If anyone wants to join that, I'm sure you've received an email earlier today or earlier in the week, and you can sign up for that. So on that note, have a good evening, everybody, and thanks very much.